Friends, in this video, I am going to talk to you on the topic small cap investing. After 5-6 years of excellent performance up to January 2018, small cap as a space saw a sharp contraction during the subsequent year. But COVID turned out to be a great opportunity for small caps once again. Liquidity around the world and in Indian markets as well was a great driver of small cap valuations. Businesses also managed to reset themselves very quickly and very attractively so that investors felt compelled to participate in them. This saw small cap valuations go higher than valuations of established leaders of a number of industries. What made this happen? Primarily, this happened because of the promise of sustained growth, the promise of sustained cash flows, sustained performance in profits. But that may not be the case with many companies which have gained. This expectation of sustained performance in sales, in profits and cash flows led to small cap companies being valued above even large caps and blue chips. Their PE multiples and enterprise values went above established companies with even better proven track record in other sectors. So the larger companies got a lower PE ratio and a lower valuation, while smaller companies got a much higher rating and ranking. Naturally, capital flowed at a faster rate into such companies where this promise was seen by investors. But now, with the macros turning, with inflation becoming very high, with liquidity being controlled and reduced in the system, with interest rates rising, this situation may reverse. This situation is something which can see significant headwinds in the coming quarters. If that happens, then the market will revisit its valuations and what it's giving small caps today. I'm not saying that these companies are going bust, but we have been very generous in valuing these companies, and that generosity may not sustain. Markets may become sharper and more tighter in giving valuations to small caps. This has already happened in the developed markets. You are seeing how the US markets are behaving with respect to small caps. I believe that trend is bound to come to India as well in the coming quarters. So, as an investor, having had a great run in small caps, today there is a responsibility to safeguard your gains, to take your winnings home and wait for a better opportunity when you can participate gainfully in the small cap space. When you had a dream run, expecting that run to sustain beyond what it can reduce your earnings, take away your profits and make them notional. It's important for every investor to capture profits in his portfolio by booking out and going to safety. As the economy battles inflation, as liquidity reduces in the system, as interest rates rise, small caps will start facing the heat. They also need to create capex for future growth. So the entire small cap system will be on a growth mode at a time when the economy may not support that growth, and that naturally will put pressure on valuations as businesses would have expanded, but the economy would not give them enough utilization. This applies to many companies which are enjoying rich valuations, and which is why I am making this generic video on the entire space. Also, I believe that the institutional investing in this space has taken a little bit excess on the valuation front, and that excess itself will slowly come off. As it comes off, the contraction in small cap valuations can be significant, and it's important for every investor to move to safety before it is too late. Thank you for watching this video.